NEO was trading lower yesterday due to delisting fears. The SEC added 5 more Chinese companies to their delisting index yesterday. Many investment insiders suspect there will be 10 more Chinese companies added to that list by the end of this month. Although many investors are running scared, Wall Street says NEO is on sale. According to Calixto Global Investors Manager, Eduardo Costa, Chinese stocks should be invested in now, since their only headwinds are based on regulatory issues. Costa also believes most Chinese companies will be able to navigate the supply chain issues in the future. For instance, investors may notice the recent changes to analyst estimates for NEO. These revisions tend to reflect the evolving nature of China's short-term business trends. Here is a snippet of the interview with Eduardo Costa.
In one of the most beaten up and perhaps controversial parts of the market, these Chinese internet names. You say now is a time to actually start buying some of these stocks? That's very surprising to me. Why?
So we've been very cautious on the Chinese internet space and China more generally over the course of the last 12 months. It's been the most harrowing period to invest in that region. If you look, the KWEB, the Chinese internet index in the US, is down over 60% over the last 12 months, and everything is basically for sale. And if you look at the reasons that have driven that, it's predominantly been regulatory intervention. It started with the anti-monopoly measures on Alibaba, the scuttling of the Ant Financial IPO, moved to the for-profit education sector where they caused a lot of these companies like EDU and GoTo to become non-for-profit companies, culminating with Didi's IPO in the middle of last year where they didn't get the appropriate permissions from the Chinese regulatory authorities, and now a lot of the noise around potential delisting. And so the positioning is all on one side of this. And there's a lot of volatility and it's not going to be an easy path. We've had some of our lowest exposures to China over the last 12 months. And we've been thinking that now is a good time to start slowly adding exposure. And we've got a couple of names that are very high conviction that we think are going to be able to navigate this environment and are coming off of the most depressed levels I've seen in 20 years of investing in China.
That's what's been happening this week in the world of NEO stock analysis and predictions. If you haven't subscribed yet, make sure you click the subscribe button at the bottom right and subscribe to Financial Health right now, so that next week you'll get the inside scoop on the latest developments to keep you and your business on the leading edge of NEO stocks and predictions. If you enjoyed this edition of NEO Stock Analysis and Predictions, leave a comment and please hit the like or share button. We'd really appreciate it. Are you still watching and want more? Check out last week's NEO Stock Analysis and Predictions by checking out our NEO playlist.